From Kansas State University, this is Agriculture Today. Eric Atkinson here. And coming up today, K-State's Dan O'Brien will talk about the mildly positive news he's taking away from last Friday's USDA grain stocks report. And Dan looks at the favorable trend in local grain basis levels around Kansas presently during his weekly segment on the grain markets next. Then K-State's Ignacio Ciampitti returns to report on his research into dry down rates for corn and soybeans ahead of harvest. Using the black layer stage of development as the benchmark, he says that being familiar with the crop's drying pace will be helpful in making harvest timing decisions. And later on, with the latest on Kansas agricultural weather, K-State's Mary Knapp. All that right here on Agriculture Today.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
We've a host of things to get into on the grain market scene now with K-State Research and Extension. Grain market economist Dan O'Brien, based in Colby, northwest Kansas. Let's get this quickly knocked out and then move on to some other things, including local basis levels around Kansas and some other interesting tidbits here, Dan. But it did not take long for the markets to move past last Friday's USDA quarterly stocks and small grains reports, did it?
Yes. It was just sort of a minor blip impact on things. There actually was some pretty good news on the demand side in terms of what the corn stocks and soybean stocks numbers had shown, and even grain sorghum, given where we are, still indicating a good pace of usage. So that is positive for the long run of where we might go as we work our way through what looked to be pretty large crops coming here for a fall harvest of this year. The wheat number for June-August usage was below last year, down to 668 million bushels. And last June-August 2016, we had used about 742, 744 the year before that, 754 the year before that. So at a time when we're really desirous of having wheat move, we are having just so-so usage, and of course that's reflected in the cash price side. The wheat numbers, for the sake of production, the hard red winter wheat production was pegged at just about 8 million bushels less than what had been expected, or in essence what the USDA's numbers were in the August report. So a little bit lower. Could have, I guess, on the optimistic side, it could have been higher, and then we'd have probably seen a negative reaction. But by the time you brought all these numbers in, you saw, again, the hard red, soft red numbers down a little bit lower, that being reflected then in the all-winter wheat numbers. But the big negative that came out of that report, at least it was responded to negatively, was that the other spring wheat number came in higher than had been expected by about 14 million bushels or so. Well, actually, by even more than that, by about 35, 40. What was shorter for winter wheat production was more than offset by the hard red spring number. So in balance, really kind of a neutral, non-game-changing figure, but now we have the line drawn. You know, the hard numbers there for the market to respond to, and from there we'll go forward and look at things like pace of planting for winter wheat here in the next, here in October, and hopefully we get everything done in October given the moisture, but in the time period we're in right now, we're watching seedings of winter wheat, and of course all the way through we'll be watching to see just how much of an export pace we can have for wheat as we move on and through the November, December, and winter time frame.
What may have been most encouraging out of the reports, again, was the grain usage number or numbers for corn and soybeans, much to the friendly side.
Yes, 2.93 billion bushels of use. The numbers last year were a little bit higher than that, but still what we had coming into this report, the market basically implicitly was expecting about 50, 60 million bushels less than that. So, of course, we'll take the positive usage on the corn side. That'll be reflected in feed usage, no doubt, and also some strength in ethanol demand. And on the bean side, again, the market implicitly was expecting about 628 million bushels used during that June-August time period, and the numbers came back about 665 million bushels. So, again, to the positive. And frankly, the USDA over the last several years coming into these harvest time frames has made good, solid, conservative estimates of usage. And in the years when we've had positive surprises in the market coming out of harvest on into January, February, March, we've had generally pretty good usage. And in some of those years, usage has jumped by 200-300 million bushels for these, well, at least for corn, and same proportionally then for soybeans. So we'll see what happens, but that we've had a little bit better than expected usage for these major crops, as shown by our stocks numbers, are really a bit of positive sunlight on what's otherwise looking like a large crop, low-priced harvest for 2017.
Bringing it more to present day, then, the markets are keying to one degree or the other on harvest progress and, in fact, the winter wheat seedings. On the latter, Dan, we have had rain here in Kansas, so one wonders if we will potentially see the markets take note of potential planting delays.
You know, Eric, it's always a challenge to see a broader perspective on the markets when in your own backyard you see what's happening in terms of field work or seedings or yields. But I think that the moisture we've received around the state has been widespread enough that it's going to slow us up some in winter wheat seeding, and will have some effect as when we can get into the fields and actually start harvesting crops for the majority of the state. Latest numbers that came out of the NASS report for crop progress dated October the 1st indicated we had about 21% of the winter wheat planted here in Kansas, and our normal average is about 39, and that's October 1st before the rains came.
Right.
So we're likely to see that spread between the multi-year average and what we're actually doing become even wider. Or we're seeing that happen at the same time that we're not that far in, again, major portions of the state of seeing the typical time when we'd be in the fields harvesting corn and looking at sorghum and soybeans as well. But again, some of the late summer cooler temperatures, the wet conditions now are going to slow that down. And in parts of the state, you would wonder how this collision of time demands and fieldwork needs are going to play themselves out.
Speak to what we see currently, if you would, Dan, as you've done in your weekly notes on Ag Manager, by the way, to our local basis levels for our grains as harvest progresses with this current slowdown notwithstanding around the state of Kansas. Actually, you're seeing some slivers of strength there. Yes.
People watching the grain sorghum market aren't surprised by this. But people that are just casual observers that maybe don't have grain sorghum to sell or are anticipating to sell probably be surprised by how much strength we've seen in grain sorghum basis bids in the last several years. In fact, when you look at the basis data we have on our Ag Manager website and compare what level grain sorghum basis is at now versus the previous 3-year average, 14, 15, and 16, compare that to corn, to wheat, to soybeans, we're looking at grain sorghum being actually over and above its 3-year average basis level. You really see that more so in the central part of the state. Looking at corn bids, yesterday's corn bids, Thursday, October the 5th, running from, in the central part of Kansas, the best bids listed for Hutchinson at 25 under Deese, but most bids running 50 to 43 or so cents under. That would be for corn. And here you look at in the same region for grain sorghum, you've got basis bids 35 under Deese, 40, 30 under. In a number of these locations, the grain sorghum basis bids are better than the corn bids. But when you go out to western Kansas, again, more of a traditional basis differential with corn bids, depending on whether you're at the major centers or not. In Dodge City at 20 under, Garden City at 15 under. Protection, not a big town, but a strong market, 20 under. Sublette, 5 under for corn basis bids, so some pretty positive numbers there. Grain sorghum basis bids out to the west, again, 55, 60, 70 under in a lot of those same locations. So the place where the basis strength is showing up the most for grain sorghum is right through that central corridor. Again, if you go on our Ag Manager basis map section, you can see geographically where all that's at, and a lot of that happening through that Hutchinson, Salina region, and even on up towards Stockton and areas like that. So basically for any of these crops that can have strong basis and or price strength, we can use the profitability in Kansas agriculture and crop on the crop side wherever we can find it. So we'll see how basis bids hold up right now, especially as we move off into harvest. I would add, Eric, that the thing that I'll be watching over the next few months, of course, will be basis, but we have had in our primary ag commodities on the crop side some decent price strength, at least not price weakness. You look at the wheat market, D-Sweet had gotten down during the month of August down to about 420. It traded up as high as 460, about 434 now. So if we do see a crunch at harvest, where will wheat go? And again, wheat's been harvested already, but it would be following along the lines of or be associated with what's happening in the feed grains to some degree. Harvest lows for corn, for Dees corn. Again, we'll be watching, again, that same August low of about 342. Here we're about 349 or so. But we've had a fair amount of negative news hit that market, but we've been loath to move much lower than the lows we've seen since, again, back in August. Even for soybeans. Actually, we've been in a pretty fair uptrend since that same mid-August time frame. We were down to about 920. Here we're about 968 or so. It's been up and down, of course. So if anything is offering some encouragement, it's that we just haven't seen a washout in the futures.
Well, again, all of this is illustrated fully in Dan's weekly grain market notes, which are now up for your review at agmanager.info. And Dan, enjoy your weekend as always. Thanks for joining us right here.
Thanks, Eric. Take care.
Our regular Friday guest, Dan O'Brien, grain market economist, K-State Research and Extension. And Agriculture Today continues after this over the K-State Radio Network.
Did you eat today? Thank a farmer. A way to get more involved in agriculture is through 4-H and FFA. Through 4-H and FFA, we have been given multiple opportunities to grow as leaders and learn more about agriculture.
You can learn skills related to jobs, public speaking skills, and you get the opportunity to travel around the country and meet new people.
If you want more information about getting more involved in 4-H and FFA, visit them on their websites at kansasffa.org and kansas4h.org.
We're back now on This Agriculture Today. In this segment, we're going to address a question that our guest frequently receives from producers, helping them understand the rate of crop dry down ahead of harvest time, which, of course, is a key to the timeliness of that harvest. Well, Ignacio Ciampitti is back with us. Ignacio, as you know, is a crop production and cropping systems specialist with K-State Research and Extension. He's put together some thoughts on analyzing that dry down rate before harvest in an update article out of the Department of Agronomy just a couple of days back. Producers understandably want to have as good a handle as they can on that dry down rate, Ignacio. What can you lend to them in that respect?
Well, we have very good conversations. As always, Eric, thanks for the invitation. I think that this is a critical topic still. Can the producers harvest at the right time? What does it really mean, right time? So for me, when you talk about right time on corn, I want to make sure that I'm 15% or above.
Moisture.
Exactly. Grain moisture. When you talk about soybeans, because we will jump into corn and soybeans on this piece. Mm-hmm. When you talk about soybeans, I need to be on the seed moisture, 13% or above. Why I'm saying this is because I have a situation, it happens, even this week, I was helping a farmer, and we harvest for a yield contest. And then you look at the final yields, and the seed moisture was 11%. So for a farmer to understand what happens when you go to sell your grain, you are selling less volume. From the moment that you didn't harvest right on time on 13%, you lose there 2% of moisture, 2% of volume.
You're always trying to find that happy medium between too much and too little moisture.
And too little, less volume. And I think that this is a critical point also on corn. On soybeans seems to be, and that's one of the things I want to emphasize, soybeans seems to go too fast from really high moisture to really low. And sometimes if we are not timing on that harvest, then we might have issues. And I think that it's all about coming back to economics. And then I think that when we're coming back about economics, then we will receive more attention there.
So on corn, let's begin there. You actually conducted a study to try to pin down the effect of that dry down, and you were looking at the black layer stage of development as your pivot point, right?
Exactly. And what is a black layer? Basically, black layer that is formed on the bottom part of the grain, and that layer is just formed with the concept that there is not any flow or movement of nutrients and water from the plant to the grain. So basically, from that point forward, the grain will not depend on the plant. So the grain is only depending on the weather. That's a black layer. It's very simple. You just go to your fields and then just start looking at some of those kernels and just look for the bottom part. You will immediately see those black layers. So what happened from that time on is one of the things, and I have a very good question, this week related to this topic. I have a farmer asking me if the final termination of corn was related to the grain moisture content or to the black layer. Most of the times, even as a specialist, we always tend to say that we are arrived to black layer usually around 36% of grain moisture content. But that's ballpark. Okay. Usually we always have, as anything in biology and systems, living systems, we have a range. So what happens is that we can probably get black layer with 40 or 45%, or we can get black layer with 20 or 25%. We usually use 36 because it's conventionally the standard, the average moisture content, and at the point that we really reach black layer. So what are the situations that they can, in some way, short the period between the flowering and the grain filling in corn until the black layer is, for example, if you have any heat or drought. Any heat or drought impacting the end of the season will do that the plant will go really so fast from flowering to the end of the black layer. And then that grain maybe will finish with really high moisture content. What is the challenge is? The challenge is that the dry down of that grain will be consuming more time. And it will depend on the environmental conditions, and we will get to that point. So the other situation is all the opposite. If you have excellent growing conditions, sunny days, good temperature, rain, not this year, then you will probably start stretching a little bit more, and the duration of the seed filling or grain filling on corn start extending until probably potentially the black layer is formed with 24%. For our farmers, just in simple terms, corn is terminated when all the kernels are reaching black layer. So if that is 36%, grain moisture, that's okay, but termination is related to black layer. And that's kind of the answer on that question of if it's black layer or if it's the moisture. So we try to connect with moisture because it's something simple for us to understand and relate to. So what we did in this study, basically, we follow the changes on the grain during the flowering time until the end of the season. We determined what was the point of a black layer. And from there, because we knew that from that time until harvest, the corn will never depend on the plant. So it's only depending on environmental conditions. We start looking at environmental conditions, and we have this one location very nearby Manhattan. We have good temperature. We have no rain. So basically we have dry down rates that they were ideal. And the rates that we quantify was basically we have in 23 days, we went from 35% to 13% moisture in the grain. So we dropped 22% in 23 days. So we drop on average 1% roughly per day. Okay? That's a kind of a simple math. Someone was asking me also as a good question, follow-up question on this study, is that always the most common type of dry down rate? And I say no. If corn was arriving to flowering late and is arriving to, for example, grain filling at this point, you will see that we have rainy conditions, we have lower temperatures. So this dry down rate, it usually can go even to the low side of being 0.25% or less than 0.2. And that could be a challenge if you have from 40% to your 15. if you are talking about going 25 points of moisture content with a really 0.2% per day, that will take several days. And I think that that's one of the things that we need to realize at this point. Is a good exercise for two things. One is to really time our harvest. And then second is really to make sure that planting time, whatever practices will impact how the corn and when the corn is reaching this moment. So the weather that we are experiencing right now is not really so conducive.
It's slowed that rate down.
It's slowing that rate down
substantially.
And I think that we have another study and we are quantifying rates right now of less than 0.5. And I think that if we get in the next 2 weeks, we'll probably even go to less than 0.2. So at this time, is to drop, that it will take not 23 days, but it will take 50 or 40 days.
This same principle does apply in many respects on the soybean side as well, does it not?
Exactly. And exactly the same, all the concepts, everything that we discuss on corn applies exactly the same on soybeans. The main distinction on soybeans, and I think that is a nice reminder for our farmers, soybeans reach black layer with a really high moisture content. In our study, we were reaching black layer with 56%, okay? But what was amazing from soybeans is like how fast they drop. They go from 56% to, 12%. We are dropping more than 40% on the seed moisture content. And we were dropping that in 15 days.
So you say in the article a rate 3 times faster than that of corn.
Yeah, and that's one of the things that I'm concerned on soybeans sometimes. I'm concerned, and that's what the example that I discussed before was on soybeans. I'm concerned of this point. When we reach black layer, when we reach really the point of termination, soybeans move really fast if you have really good environmental conditions. Dry weather, nice temperatures will really just drop that grain content, and you will go from that 50 to the 13 that we really want in a rush. You see there 15 days, we drop 40% of points of moisture in the seeds. And that's why my concern is we really need to make sure that we time our moment of cutting soybeans. And one of the things that is on soybeans is even not that easy, so complex. When you think about your plants, think about what section of the canopy will reach black layer. Mm-hmm. Is the middle part, if the upper part, if the lower part. So we are working always to trying to understand. We capture in this study all the parts. Again, similar to corn, just to finish, on the soybeans, we also have some variability. So if our soybeans were finishing before than the mid-September, our rates probably can go even faster. And if my soybean is finished, if I have a double crop situation and my soybeans are finishing in October, so my rate in that case will be quite slow. How much slow? I would say in some cases we were quantifying, in this case we quantify roughly 3%. We were dropping 3% per day. There are situations that we were getting close when we were in double crops at 1%, 1.5% per day. Mm-hmm. So we really need to be careful. We really need to start be thinking about this to time our harvest.
Producers, if you'd like to learn more about what Ignacio has been talking about and, in fact, investigating in recent years, go to the E-Update series from K-State Agronomy, and it's dated September 29th, this particular newsletter. It talks about both corn and soybean dry down rates ahead of harvest. It'll outline this in more distinct detail at agronomy.ksu.edu. Good work once again, Ignacio, as always, and thanks for being by.
Thanks, Eric, for the invitation, as always.
Another visit there with crop production and cropping systems agronomist Ignacio Ciampitti of K-State Research and Extension. And Agriculture Today will be back shortly on the K-State Radio Network.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State Research and Extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
Broadcasting from the campus of Kansas State University, this is Agriculture Today. Glad to have you back. Eric Atkinson here to today's agricultural news headlines for you now, courtesy in part of DTN. President Trump's nominee to be chief U.S. agricultural trade negotiator, Kansas native Greg Dowd, promised to not go backwards in the North American Free Trade Agreement renegotiations. This in response to questions during his confirmation hearing at the Senate Finance Committee yesterday. Dowd said it's hard to overstate the importance of NAFTA, but that there are things we can upgrade, in his words, including U.S. dairy access to the Canadian market. Dowd said the U.S. needs to be on the offensive trade-wise in Asia as well. One area where work is needed, he says, is Japan. Quoting him, "We are at a particularly critical juncture in terms of our competitiveness for U.S. meat exports into Japan. Failure to address this situation immediately does not bode well for our competitive and rapidly expanding production of beef, pork, and poultry." Dowd went on to say, in fact, this is not only true for Japan, but for all of Southeast Asia. Under questioning, he also said that the issue of European Union demands for geographical indicators for cheese, meat, and wine are a top priority. Dowd is the former Senate Agriculture Committee Republican aide. He was introduced by Senate Agriculture Committee Chairman Pat Roberts, who also sits on the Finance Committee. Roberts said that he has been pleased to have Dowd as an advisor when he was on the Senate Agriculture Committee staff. But despite Roberts' enthusiastic endorsement, the chairman did press Dowd hard to promise to do no harm in trade negotiations and to try to bring stability to the Trump administration's trade policy, which Roberts described as more ideological than most. The committee also heard testimony from nominees Jeffrey Garish to be Deputy U.S. Trade Representative and Jason Kearns, a Democrat, nominated to be a commissioner on the International Trade Commission. Now, in what might be a summary of his approach on trade, USDA Secretary Sonny Perdue said that agricultural trade policy is like policy toward North Korea. All options are on the table, in his words. Perdue was speaking to the Washington International Trade Association on NAFTA. Perdue said he believes there is a real opportunity to open Canadian dairy markets. He said he has been somewhat disappointed in NAFTA round so far, but believes the next round will be an opportunity to bring up more serious agricultural issues. Moving on from NAFTA, Perdue said that even though China is the biggest market for U.S. farm exports, it also restricts U.S. beef, rice, poultry, and corn products. He also said broader China access for livestock products and biotechnology still need work, and that he would like to talk to the Chinese about their cotton policy and convince them that U.S. food safety standards would work for them. Due to the long security relationship with Japan, he said the U.S. should have a preferred status for exports to that country, but instead Japan has granted preferences for Australian, European Union, Chilean, and Mexican products. Perdue also said he's interested in other Asian markets and that he's advising the president on his upcoming trip to Asia. The USDA now has complete export numbers for the first 11 months of the 2017 fiscal year, and one USDA analyst is calling those encouraging. Here's more from the USDA's Gary Crawford.
Yes, the 2017 fiscal year is over, of course, but it takes a month to gather and process all of the agricultural trade numbers. So what we have reported this week is for August, taking us through the first 11 months of the 2017 fiscal year. Now, the Agriculture Department has been forecasting that for the whole year, the U.S. would export $139 billion worth of ag products,
which at this point looks like a pretty reasonable estimation.
USDA trade analyst Bryce Cook says we sold $10.2 billion worth in August. So after 11 months, we had
$129.9 billion worth of agricultural exports.
10% more than for the same time frame a year ago. So if October runs as expected, the U.S. would meet that $139 billion mark.
The fourth highest export total on record.
Meanwhile, after 11 months, compared to the same time frame a year ago, the value of corn exports is up 12%, wheat 25%, soybeans 17%, cotton up 79%. Gary Crawford for the U.S. Department of Agriculture, Washington.
And you're listening to Agriculture Today. On now we go to this week's edition of the Kansas Wheat Scoop. Waiting with that is Marcia Boswell. Marcia?
The R Street Institute, Taxpayers for Common Sense, the Heritage Foundation, and other like-minded groups held a Farm Policy Reform Summit in Washington on October 4th. These groups have proposed policy changes to the Farm Bill that are bad for farmers, the economy, and are misleading. In response to the summit, David Shem, president of the National Association of Wheat Growers and a Sharon Springs, Kansas farmer, made the following statement. Shem said the most misleading argument made by these groups is that crop insurance is a federal subsidy or handout. Quite the opposite. A farmer might go many years paying premiums for a policy and rarely get an indemnity. Earlier this year, within a short span, my crop was impacted by a late-season blizzard, disease, and a hailstorm. Crop insurance didn't allow me to make a profit, but rather recover some of my loss and enabled me to farm another year. I can personally say that a farmer would much rather get a return on their crop from the market, rather than becoming eligible for an indemnity on insurance because of a disaster. Furthermore, the risk in the business of agriculture is much different from risk in other industries. These groups fail to consider risks unique to agriculture, including lower rates of return and weather-related risks. Farmers also aren't competing on a level playing field on the international market. Countries like China use trade-distorting support programs that violate their WTO commitments and depress world prices. These are just a few reasons why the federal crop insurance program continues to be the most important risk management tool available to farmers. Rural America and farming families are experiencing some of the worst economic hardships in decades. Now isn't the time to implement policies that harm these families and stump economic growth. The National Association of Wheat Growers encourages Congress to ignore the rhetoric made by these groups during the reauthorization of the 2018 Farm Bill, and to continue to work with farmers during the process. Farmers across the country need a strong safety net to enable them to farm another year and to continue growing a safe, abundant, and affordable food supply. Kansas wheat farmers support the National Association of Wheat Growers through their membership in the Kansas Association of Wheat Growers. For Kansas Wheat, I'm Marcia Boswell.
Thanks, Marcia. We'll take one final break and then catch up with K-State's Mary Knapp. We'll get her take on the rainfall yet to come today around Kansas and perhaps a comment or two from her on the La Nina outlook. You're listening to Agriculture Today. Legal and financial concerns surround the day-to-day management of the agricultural industry. Producers, ag creditors, and USDA agencies rely on Kansas Agricultural Mediation Services. If you've received an adverse decision from the USDA or have an ag credit concern, call today 800-321-3276 or visit us online. Kansas Agricultural Mediation Services, exploring options, generating solutions. For you now on Agriculture Today, our weekly segment on the Kansas agricultural weather scene. And via phone, we talk now with Mary Knapp, Research and Extension Climatologist at K-State. She's on the road on assignment today, but checks in with us to let us know, among other things, Mary, about the final numbers on the precipitation and temperature patterns in Kansas for the month of September. And you might summarize those briefly for us.
Well, basically, it came down to the haves and the have-nots. And the haves were in the western third of the state, and the have-nots were in the eastern third. And the precipitation totals, what we have is that all of the western divisions were above normal for the month, and that contributed to our statewide normals being very close to normal for the month of September. But again, as you creep eastward, those amounts drop off. The South Central also managed to be about 105, 110% of normal. But as you go north into the Central Division, not so good, and North Central also not so well. But when you get into the Eastern 3 divisions. None of those were as much as half of what they normally saw for September. And of course, September still is one of our wetter months, so that meant the rainfall deficits showing up in those eastern 3 divisions are quite significant. We're looking at 3 to 5, as much as 6 inches below what they would normally get for the year to date. There are spots in the eastern areas where the dryness was not quite so unwelcome, particularly south of the Kansas River, where they had an extremely wet August, and so this gave an opportunity for some of those fields to dry down. But overall, again, the western divisions have fared much better than the eastern, which is not our typical pattern.
And it was a warmer than normal September, was it not, when all was said and done?
Yes, it was, but again, not by a huge amount. It comes right in the middle of the pack if you want to look at the distribution of temperatures. And again, we had that east-west bias. The warmest divisions were in the east, which is not surprising given the lack of rainfall that allows the atmosphere to heat up much more. In the west, the southwest division was closest to normal, and it was about 0.3 of a degree warmer than usual for September, which is about as close to normal as you can get. Again, we saw quite a range of temperatures. 102 was the high reported, and that was reported at multiple locations on various dates, the latest on the 21st of September. But we also saw some extremely cold temperatures with a low reported at Brewster of 30. So quite the range of temperatures. Again, not unexpected at the fall season where we do typically see those big swings.
Well, we are now into the month of October, and this first week of the new month, well, it featured rainfall abundant but spotty, to put it that way.
Yeah, and again, it's definitely still maintaining that west to east bias. And it's been, as you said, spotty. I had one producer call in, and they had less than a half an inch out of the storm, and their neighbors county to the west had between 4 and 8 inches of rain. So, again, a very uneven pattern for that, but the heaviest amounts in the west. The system has not moved out yet, and there is some expectation of heavy rains across parts of north-central, northeastern states. So we'll see what we manage to squeeze out before the system leaves. But again, we could use more. We've gotten some out of it, and it's come in a slow, steady pattern that allows for some penetration to that top few inches of soil rather than having it all run off.
That soaking rain was just the ticket for those who really needed it. And on this system that's plodding along, it's expected to linger here in Kansas and then moves on out over the weekend. And what's likely ahead following that, Mary?
Well, after that, they're looking at having a shift to a more normal pattern, maybe a little bit on the dry and warm side. But again, we'll see how that actually plays out. And for the western areas of the state, a dry pattern would, in fact, for a good portion of the state after this rain, a dry pattern would not be unwelcome because that would give an opportunity for some of the harvests that have been interrupted to be completed, maybe get some planting of the fall planted crops in. So, again, not totally unwelcome, particularly if we can get another half an inch or inch out of the system before it exits the state.
And seasonal temperatures for the most part, you say?
Well, for the 6 to 10 day outlook, the temperatures are looking to be very much on the seasonal side. As we move towards the middle of the month of October, there is some expectation that they will tilt towards the warm side. Again, on the precipitation side, we're looking at below normal for the next 6 to 10 days. And if we move out to the 8 to 14 day, still looking for below normal in the western half of the state, but near normal for the eastern, which again, we would be willing to take a little bit more moisture out in our neck of the woods.
You bet. And one last thing briefly here, there are more and more media accounts referencing La Nina and how it might be shaping up as we head into the late fall and winter. What is the latest there, Mary?
Well, the latest is that they still expect that La Nina to develop. The question will be how much impact it will have on the Central Plains. Mm-hmm. And really, when you get into it, we don't get a huge impact from it, again, particularly not when it's so late in the onset. An earlier onset La Nina will typically give us a warmer and drier than normal pattern for the fall. And as you move later on that onset, starting at this time or later, those influences kind of get lost in other factors that can come into play, whether the polar vortex gets active or what happens with the Madden Julian as far as storm generations. All of those can come into play and can basically overwhelm any impact that a La Nina might have for us. They are calling for wetter and colder than normal across the northern part of the United States, which is, again, very much in keeping with a La Nina signal. So that's driving their forecasts right now, but confidence in that doesn't tend to be super high.
Mary, thanks for taking time out of your schedule today to touch base with us. We'll get together again next Friday.
Thanks, Eric.
Our weekly visit there with research and extension climatologist at K-State, Mary Knapp. Rounding out our Friday edition, and our thanks to you as well for being along with us. Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.